A recent report from Citi predicts we are approaching a turning point where, quote, the promised potential of blockchain will be realized and be measured in billions of users and trillions of dollars in value. Joining us to discuss that report is Citi Global Insights Future of Finance Head, Ronit Ghose. Ronit, thanks for joining us this morning. So this Citi report on blockchain that you co-authored speaks to the promised potential of blockchain and how it will be measured in billions of users and trillions of dollars. But the report says this will be driven not by Dogecoin, but by CBDCs, tokenized assets in gaming, and blockchain-based online payments. So tell us a bit about that, and what role will cryptocurrencies play?
Sure. Well, first of all, thank you so much for having me on the show and featuring our report. Once a year, we write a big report on something that's coming down the pipe in the future of finance. My team's called the Future of Finance. And what we talk about in the report is how money is different to other types of innovations. And the reason blockchain scaling hasn't really taken off in big numbers so far is that blockchain's about the transfer of value. It's about money, it's about value. And most of the time that's regulated in most parts of the world. So while my friends who are much more in the public cryptocurrency space and usually hate the idea of CBDCs or centralized tokens, they'll be shocked when I say like CBDCs are going to be a reason to grow blockchain adoption. We think CBDCs will be a Trojan horse. It'll be like almost coming in from the side, the back door, and that's what's going to push the adoption in financial services of tokenized assets, tokenized money. And then we're going to be talking about TAMs, market sizes of trillions, not billions.
It's interesting that you use the term Trojan horse. I feel like there's a lot of controversy about this, right? So definitely there's people who say that, okay, this will like cause people to, I don't know, Google or, you know, what is blockchain, and maybe it will increase adoption. But then there's a whole other camp that says it's actually quite the opposite. This will just, I mean, I guess a Trojan horse isn't necessarily a good thing, right? It sort of depends on how you interpret that phrase. But I think there's a lot of people who think that, you know, it's basically going to serve as this sort of not real replacement for cryptocurrencies. You know, in countries that don't like the idea of decentralized cryptocurrencies, they're going to put in a CBDC and be like, okay, just use this instead, where there's nothing decentralized about it and it doesn't have privacy protections. And it's basically their way of edging out decentralized cryptocurrencies. I mean, don't you think that there's some legitimacy to that argument?
Oh, totally. That's why I say it's a Trojan horse, or it's an unexpected likely development from the side. Because many, not all, many central banks are doing CBDCs as a centralized response to either decentralized cryptocurrencies, the Bitcoins of the world, or as a response to private sector technology companies wanting to, like we've seen with Libra and DM, launch their own tokens. But the end result of this is going to be that we're all going to become familiar in our digital wallets and our Web2 digital wallets, not the MetaMask of the world, but the Apple Pays and the others, will have, by the end of this decade, tokens in those wallets. And it's a short jump from having a CBDC or a bank-issued stablecoin to a wide variety of other tokens. Now, blockchain is a technology. If you're a centralizing society or a centralizing state, you're going to be using this from a centralized perspective. China's a good example of this. They're not going to have a CBDC likely based on blockchain. But when you come to cross-border, blockchain has a real value when you're looking at fragmented systems. Cross-border CBDCs, that could be a great use of blockchain. In India, in Europe, in democratic countries, as they embrace CBDCs, there'll be some element of blockchain-based or DLT-based interoperability in CBDCs. And it won't just be CBDCs alone. Gaming tokens, which are going to take off in the next 2 or 3 years. Digital securities, the buy side is pushing, the traditional buy side. Big institutions such as the BlackRocks of the world are pushing for this. It's going to be 3 or 4 different drivers. CBDCs, digital securities, and in-game tokens. And that's what's going to drive the growth of blockchain adoption on the next 3 to 5 years.
How much of this hinges on the idea of on the Americans adopting a CBDC? If the Americans decide not to adopt it, if there's political pressure, and there seems to be increasing political pressure for the Federal Reserve not to create a CBDC, but to say, look, we'll just let the stablecoin market handle this. What happens to this thesis? How much does it hinge on the Americans?
So I'm based in Dubai, in the United Arab Emirates. When it comes to digital money and CBDCs, this is going to be led by parts of the world that are closer to me than to you guys in the US. America is the world's biggest capital market. And when it comes to tokenized or digital securities, that's where blockchain is going to be growing in the regulated space in the US. Big buy-side institutions, the PE firms, the VC firms saying, hey, having a blockchain-based solution allows me to access a new user base. And they're all regulated anyway. So this is not about something new. There'll be regulated institutions who'll be adopting for whether a new class of PE fund or a new class of VC digital securities. The CBDC story in the next couple of years is going to be here in the UAE, in India, maybe in Europe, not so much in the US.
Interesting. All right. I know you got to get going, Ronit, but thank you for your time this morning. That was Ronit Ghose, Citi Global Insights Future of Finance Head.